Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, July 15th. The Department of Commerce reported retail sales rose 0.1% in June. Excluding autos, they were up 0.8%. The market had been expecting increases of 0.4% and 0.9% respectively. Gasoline station sales were a major driver of the ex-auto number, which is typically seen as a better indication of consumer spending given the volatility surrounding auto sales. If you exclude gasoline station sales, which were up 4.6% versus May on an adjusted basis, retail sales were down 0.5% from the prior month. This is a disappointing monthly report given the heightened expectations following the same-store sales data released last week. Retail sales, though, excluding autos, are up 5.5% versus the same three-month period in 2007, which reflects the benefits of fiscal stimulus spending in the face of macro headwinds. Now, retail sales account for about 40% of personal consumption expenditures. While the June report wasn't as strong as expected, it won't alter Briefing.com's view that real GDP should increase at least 2.5% in the second quarter. This morning's other economic release was the Producer Price Index. Producer prices rose 1.8% in June, while core PPI, which excludes food and energy, jumped 0.2%. The market had been expecting increases of 1.4% and 0.3% respectively. Total PPI is up 9.2% year over year, reflecting the very well-known pressures of rising food and energy costs. The core number, meanwhile, is up 3% year over year. The latter reflects a stable trend versus the prior month, which is an encouraging indication. The market will reserve judgment on the inflation data until Wednesday's release of the Consumer Price Index, which will show just how much of a pass-through effect there has been from rising producer prices. Still, a stable reading for core PPI is a positive data point in the inflation discussion. I'm Pat O'Hare for Briefing.com. Thanks for listening.